Let's bring on board Allcargo Logistics. The company delivered its Q3 numbers. How were the set of results? Well, mostly the growth was led by volumes and revenues from the MTO and CFS business. It was not bad a set of numbers because we had a top line growth of 22%, profit growth of 37%. So let's bring on board then Prakash Tulsiani, the Executive Director and CEO of CFS and ICD with Allcargo Logistics. Mr. Tulsiani, thanks so much for giving us your time on ET now. Just to start off with, if you could round up what the quarter was like for the company and what were the key highlights.
Allcargo Logistics has completed 25 years of existence, a great growth track record and consistent performance. On the Silver Jubilee celebrations, the directors have actually come out and given a special dividend of 75%. And this is on top of an interim dividend of 100%. So total dividend of 175% in this quarter. So the performance has been good. The numbers have been strong in this particular quarter. All the businesses, the three main businesses that we have, existing businesses have done extremely well. And to start with, on a consolidated basis, we see our growth in numbers in terms of revenue at 22%, while our EBITDA has gone up approximately 20%. Taking our MTO business, there is a good growth of 16% in volumes and approximately 8% in terms of EBITDA.
You know, up until now, for the 9 months of FY19, you've grown at 13%, so not bad at all. Are you confident of being able to continue this growth momentum in FY20?
We remain confident. We see that our team members, that is our MTO business, has done very well. And we believe that coming months also we should be able to do, we should continue with the numbers that we have shown in the past. And that being said, of course, we are in the marketplace and it certainly depends on how the market plays out and what happens to the current negotiations which are going on between the two large countries in terms of trade restrictions. So
all right. Could you also talk to us about what the EBITDA margins trajectory looks like? Is it going to stay range bound despite a good growth because of competitive intensity by global as well as domestic players?
See, in our businesses, of course, the competition is increasing, and definitely we can see in the local play also in terms of CFS, the DPD volumes are increasing, while the volumes which are under the control of the shipping lines are reducing to some extent. And that is the reason that it is important that we continue to go and gain market share, increase our volumes to maintain and grow our real EBITDA. So the margins would slightly go down, but that is compensated by increased number of volumes of containers we handle.
All right. What's the cash on your books and the inorganic opportunities? Are there any opportunities being actively considered? Because reports are indicating you're assessing and are in talks with Gati. Can you confirm or maybe clarify about the same?
Clearly, we have a very healthy balance sheet. We are generating good cash flows. You have seen our results now, which is a clear increase of 20% in EBITDA terms. And obviously that also gives us and the board of directors the confidence of giving that additional dividend. Coming to the question of, looking at growth, yes, there are opportunities available. We constantly and continuously look at those. However, we cannot comment on that because nothing has concluded right now in terms of any of the opportunities. But we continue to evaluate, we continue to look at them, and only if it is value accreditation for us, we shall certainly look at those, and it means long-term business to us. So clearly we are interested, but we will evaluate and ensure that we deliver the shareholder value, and only if it adds value strategically to us in terms of any M&As, we will certainly look at it.
Okay, great, Mr. Tulsiani. Thanks so much for joining in on ET now, helping us understand your Q3 numbers and, of course, even plans on acquiring Gati.